Welcome to Term Stacking. My name's Glenn Cook and I'm the term guy. In this video, I'm going to show you how you can save up to 40% on the first year of your Term 20 or Term 30 policy on top of already aggressively priced term life insurance, some of the cheapest life insurance available in Canada. In addition, we have the option of potentially saving hundreds of dollars a month at the end of the term policy, and all it's going to take is a simple signature on a form. Now, you probably haven't seen this strategy elsewhere. A couple of reasons for that. The biggest one being that, as far as I know, the strategy is only available with the type of insurance policies and the specific company we use on the termguy.ca. I don't think other companies in Canada have a very specific combination of policy features and benefits that let us take advantage of this. When I developed this strategy, I reached out to the insurance company and said, hey, I think you guys have a unique structure that will let me save my clients even more money. Are you okay if I talk about this? They thought about it, and to paraphrase their response, it was basically, sure, go ahead. So let's go ahead. Let me show you how we can take advantage of some policy features and policy provisions to save even more money than these already aggressively priced term insurance premiums. So term stacking at its core is really taking a Term 20 or Term 30 policy and pushing the start date forward under a year or under 2 years. And we're going to front load that slot, that initial time frame, with a Term 10, which is cheaper, of course, than a Term 20 or a Term 30. So easiest way to see what's going on here is through the use of contrasting examples. Let's take a 40-year-old male non-smoker who just had their birthday yesterday. They're just 40 years old, looking for $500,000 of Term 20. Shop it out. The premiums are $49 a month. So person one purchases a Term 20 at age 40, and they pay $49 a month to age 60. What happens at age 60? Well, if you recall from our options video, we have 3 choices. We can cancel. We're done our 20 years. Everything went swimmingly. We're done. We don't need the insurance. We cancel it. Option 2 is we can convert it. And option 3 is, again from the options video, is we can renew the insurance, which means keeping the insurance, same insurance policy, but the premiums go up. In this case, the premiums go from $49 a month to $550 a month. This is not an attractive option, but it is an option nonetheless. So that's person number 1. Let's look at person 2, and we're going to do term stacking with them. So what we're going to do is, instead of purchasing a Term 20 right now, we're going to purchase a Term 10. And we're going to keep it to just before our 41st birthday. Term 10 premiums are $29 a month. Boom, there's our 40% savings for almost a full year. Now, just prior to the 41st birthday, we're going to use the exchange option. Again, from our options video, you'll recall the exchange option lets us trade in our term and get a new Term 20 or Term 30 policy. So we send back our $29 a month 10-year term, and now we get back a 20-year term. What age are we at? Well, we're still 40. And so what's the premium for a 40-year-old? $49 a month. So now this person is paying $49 a month for the duration of the policy, just like person 1. But in the first year, or just a little bit less than a year, they only paid $29 a month. So right away, we've saved 40% of our premiums. Now, let's take the second person forward to age 60. And again, we have 3 choices. We can cancel. We've had the insurance for 20 years. Great, we're done with it. That's what we expect to have happen. Option 2 is we can convert it, just like person 1. But option 3 is very interesting. Because we pushed the start date of the 20-year term forward by just less than a year, at age 60, we've still got just less than a year left on this Term 20, which means this person doesn't have to pay the $550 a month renewal premium. They can keep the insurance for almost another year at $49 a month. That's $500 a month savings over the person that bought the Term 20 and renewed it. They can keep the insurance and pay $49 a month. Huge savings at the end of the term. Now, with all things life insurance, we should always be very concerned about what's guaranteed. In this strategy, there are 2 things that are not guaranteed. The first is the availability of the exchange option. The exchange option isn't in the policy, it's administrative. The companies do it, but it's not written into the contract. The second thing that's not guaranteed is the premiums when we do the exchange. So just before age 41, it's whatever the premiums are for a 40-year-old at that point. And that's a year in the future. What are term premiums a year in the future? We don't know. Now, The exchange option is offered by almost every company in Canada. I think over the next year, because these are very short time frames, it's unlikely any specific company would remove that. It would make them very uncompetitive in the marketplace. Secondly, term premiums, particularly over the short term, do one of two things. They either stay the same or they go down. And if they go down, that's even better for us. Instead of in a year paying $49 a month, hey, premiums went down to $45. That's great news. But it's possible that they could go up because it's not guaranteed. I think the probability of that happening is extremely unlikely, but the possibility exists. So I'm just making you aware, exchange option isn't guaranteed, and our future premiums when we do the exchange are also not guaranteed. But in my assessment, very unlikely for any of those two things to change in the short term. And if they do change, it's to our benefit. Now, because the implementation of this is very straightforward, we just get a term 10 instead of a term 20 or term 30. And when we do the exchange, we sign one form. In practice, it's very easy, but getting the numbers out to figure out what the actual numbers are and where the exact dates are, as you can see, is a little bit more complicated. So we don't have an easy to use calculator on our website that you can put in your date of birth and figure it all out. We need to do this almost by hand. So if you'd like to see the term stacking strategy for your specific situation, for the amount of coverage and the type of insurance you're doing and your birth date, please feel welcome to reach out, contact us. Our phone number and our email address is on the website. Reach out, give us the data we need, and we'll create a custom proposal for you that will let you compare options of getting a straight term 20 or term 30 versus term stacking. Make the evaluation. Do you want to save this money or not?